Hello investors, welcome to Business Learnings. This video is about PVR Limited. The all-time high of this stock was 2125 rupees, and from there it is currently trading at just 853 rupees. So if you see more than approximately 60% of correction, is it justified, this kind of correction? Will the stock ever recover from these levels? If yes, then how much time will it take? What does the future look for this stock? What are the prospects? How much can you expect if you invest into this stock right now? Should you buy? Should you hold? We'll discuss all these kinds of things in this particular video. So watch throughout to the end to get the full understanding of PVR Limited. So yes. First of all, we will talk about the key reason for this kind of price fall. The key reason is coronavirus outbreak. So cinema halls were the first to be closed and they will be the last to be opened for a common public. Now, if you look into the revenue sources of PVR Limited, about 55% comes from the ticket sale, 28% comes from food and beverages, 12% ad and royalty. So everything is just centered around people going and visiting the cinema halls. And since people are not visiting the cinema halls, the business is hit. But is it really hit so bad that the stock has corrected by 60%? Probably not. Let's try to understand what are the possible outcomes that could happen in the next coming few quarters. Okay, this is completely my opinion, and you could have a completely different opinion. Everyone can have its own opinion on how much time will it take for the cinema halls to start functioning the way they used to function. So what I think is, at least in this particular quarter, cinema halls will not be operational. In the second quarter of financial year 21, there might be some activity, although that still will be quite less. And I think that to get the full recovery, it is going to take one complete financial year. And if you are following news, you must be reading reports where it says that now you will have to learn to live with coronavirus. A lot of people will still not prefer going to public places. With digital entertainment being such a popular thing, you can binge watch your shows on Netflix, Prime and all. The outlook for go out and watch cinema, this kind of business does not look very bright to me, and that's why I think that probably some of the correction in the stock is justified as well. Now, given that the theaters are closed for PVR, how is it going to pay the debt? How much debt does it have? What is the interest coverage ratio? So debt to equity ratio of PVR Limited is 1.18, which is a big number, which is a cause of concern. Debt is more than the equity, and therefore the interest payments are going to be huge. The interest coverage ratio is 1.58. Interest coverage ratio is how many times can you pay off your interests from your operating income. So this is just 1.58, a very insignificant, a very small number, a case of problem. But at the same time, we should also look at how much money does PVR have. Does it have enough money to pay its debt in the coming few quarters without being operational, without even opening any of its theaters? If you try to look into the answers of these questions, you will find that yes, it has a cash balance of approximately 300 crore rupees, and the total obligations in financial 21 is going to be 200 crore rupees. So it is going to sail through financial year 21. In financial year 22, the obligations would be approximately 225 crore rupees. So a bit of problem there. The company will bankrupt if the lockdown continues for more than 1 year. That is the key learning. Next thing that you should note is how is the management of the company responding to these kinds of things. So management has taken a lot of actions. for every company there are two kinds of costs: fixed cost and a variable cost. Like fixed costs are, for example, rent that you have to pay every month. It does not matter whether you are running the business or not, you have to pay those fixed costs. But PVR has been able to cut down on the fixed costs as well, and that's why I have some belief in the management that they will find out a way to get through, to sail through this coronavirus for quite some time. So yes, from the management side, from the corporate governance side, this company looks attractive to me. Now let's look at the core numbers, the profit and sales growth. So for the last 5 years, the sales has been growing at 18%. The net profit has been growing at approximately 30%, which shows that the operational efficiency of the company is consistently been increasing, and the efficiency, the quality, the optimization, everything is working fine. The company is expanding a lot. Another number that I'll tell you is the cash flow numbers. If you just look at the cash flow numbers, cash flow from investing activities, they are huge negatives and they are increasing with years, which shows that they are growing heavily. They are investing, opening up a lot of theaters and at a lot of places. Of course, due to this coronavirus, everything has come to a halt. But before that, it was growing very fast, and that's why it got the valuations. It was trading at a PE of 50, and now see the PE of currently its price to earnings is just 29. By that, it's trading at a 40% discount, right? So yes, now coming to the return on capital employed numbers, since the debt is significant, you should not just look into the return on equity, which is of course good for PVR, but you should also look at ROCE, return on capital employed. The return on capital employed has been growing consistently throughout the years. For the past 5-10 years it has been growing, and this is a very good sign. Now let's talk about the competition. Okay, so this theater business, this movie cinema business, this is highly fragmented business. You have to understand that. Industry leader, PVR is the industry leader. It has a market share of 26.4%. The nearest competitor is Inox, which has a market share of 19.6%, and there are a lot of other players. Everyone is below 15%. The market is highly fragmented. And one piece of advice, if you want to take it from me, you should take that in these situations of crisis, if you want to stick to a company, if you want to invest in a company, that should be a market leader, because the market leader is the last one to go down. The industry is suffering, all the companies in that particular industry will be suffering, but the market leader will suffer the least, because it has become market leader by showing some kind of moat, some kind of efficiency, some kind of quality, and that's why it has emerged out as a leader, and it is going to be a leader for quite some time. So yes, if you want to invest in this kind of business, go with PVR, not other companies, even though other companies are available at cheaper discounts. Okay, now what could be the target price? Honestly, I don't know. I cannot tell you that, because I myself am not aware that how are the people going to behave if the lockdown is lifted completely. Not a lot of people are going back to cinemas the next day. A lot of people will still be skeptical. They are going to stay home, they are going to watch YouTube, Netflix and all. So the time that will take for the normal operations to resume for the cinemas, it's going to be a long time, and only watching how the things unfold after the lockdown, we will be able to make better predictions. So watch out this channel, I'll keep updating it. Okay, I think I have covered everything that I wanted to talk about. Yes, cool. So yes, based on the verdict, personally I think that this is a very high risk industry. If you want to invest at your own risk. The rewards could be multifold. It could be a multi-bagger in the next few years, because it is trading at a huge discount and it's a growth company. But if it doesn't play out, which I think the chances of going bankrupt is 10%, the chances of not going bankrupt and going back to the way it was functioning before, it's more than 90%. In case it goes down, you are going to lose a lot, but in case it does not go down, you are going to make a lot of money. That's my take. Invest at your own risk. Please consult your financial advisor before making any investment decisions. Thanks a lot for watching the video. Please subscribe, thumbs up. In today's session, today's speech session of the finance ministers, they talked about the aviation industry and how it is going to be benefited. In some ways it is going to be benefited, and I'll talk about it tomorrow before the trade opens for Monday, so that you can take advantage of that as well. So watch out this space for that video. Thanks a lot for watching. See you in the next video. Bye.